Hey guys, I hope you enjoyed our last two sessions and had tons of takeaways. If you all have joined here, can I get some thumbs up or emojis? You can use the emoji button from the screen. Awesome. Hi, Hitesh. Okay, we have some pretty much folks joining in. Cool. Welcome to session 3 of Investments Decoded with Nimesh Kampani, President at LetsVenture. So today he will be addressing some key areas on asset class performance. So sit back, grab a bottle of water, and enjoy this knowledge-filled session for the next 30 minutes. Nimesh, the stage is all yours.
Thank you, Ashna. And I think before I start, I just want to quickly check. I think everybody, I hope, is safe and well. I think in these challenging times, and thanks for taking out time. I think the dinner will have to wait for a little bit till I bore you with some of the slides I have. So broadly, I think let me quickly start since I don't want to keep you waiting for long. Asset allocation, of course, is at a very broad level. It's an mix of art and science. I think there is no perfect way to do what you want to do. I think the main criteria, the main things that you look at is your risk profile, your return expectation, and of course time, right? Time horizon for which you want to invest. So I think that we can take a complete separate masterclass, but I think the idea is to talk more on angel investing as one of the small part of the entire ecosystem of your investment portfolio, right? So I think let's quickly dive into it, and let me just try and take you quickly through some of the thoughts that I have and share them with you. So I think if you look at how startup investment began in India, right? I think the VCs started coming in. I think 2008 was the year when a lot of startups, took birth in India, and primarily the reason was driven by the global financial crisis. Like the biggest hit was taken by IT employees, and they said, "Hey, why not? I think there is a time to think through. There is a time we can do a lot of new things," and many of the startups came into being. I think just to draw a parallel in today's world also, I think during this last 1 year and now, we are seeing a lot of startups coming up because people are rethinking about what they are doing in life. So I think that is a topic for some other time. But I think the way it started in 2008, and then you started seeing a lot of money coming into it, right? Money flew into it. You had, if you look at it, we started maybe around that time with 250 million of total funding in that year, right? And if I were to look at what has happened in the last year, we've got around $13 billion of funding done, right? So I think that is almost a huge jump in the way the capital availability is available to the segment of private markets, right? And I think everybody would be aware of the number of unicorns that are out there, so I won't bore you with that. So we are almost at 50. I think the number will go to around 150 by 2025, and there's no stopping there. Having said that, I think let's just look at where we stand in the ecosystem, right? So I think there's a little dated slide, but so we have around 48 unicorns. I think the funded startups is around 6,400. We are number 3 in the startup ecosystem in the world, right? Now, the question should be that if we are number 3, where are we in the terms of the unicorns, right? But if I were to look at the unicorns that are there out there, out of the 750 unicorns that are out there, right, US and China account for the bulk of them, right? So almost 650 to 700 are US and China, and India is at 48. So we are just, say, 5% of that ecosystem. But if I were to look at it differently, that's where the opportunity lies, right? If I look at the next 700 companies, which are valued about $100 million, I think that's where you will see the next set of unicorns coming. And with the way COVID has changed the way people behave, changed the way people consume digital in almost all walks of life, I think you're just about to see a huge amount of growth and huge amount of unicorns coming out of India. And that's where I said, you'll be around 150 by 2025 and say 100 by 2023. So let's just deep dive into why you should then angel invest, right? And why would you want to do it, right? So I think, of course, everybody wants here to make money, right? Everybody is out here to make money, and that's why you're diversifying your asset class into from public markets to bonds to private equity, and now to becoming an angel investor, right? So I think making money remains your objective, but yes, there are other initiatives or other objectives that you have in mind when you are looking at private markets and angel investing, right? So one of them being support entrepreneurship, right? I think a lot of people are entrepreneurs who have their own businesses, and somewhere I think since we have been all doing it in the traditional way, there is always an inclination to support new entrepreneurs, the young entrepreneurs, maybe in the same industry, maybe leverage our knowledge and network, help them out, and grow that business into something big, right? Uh, of course, diversification is one of the main objectives as well, right? So how do you go about doing it, right? I think one of the main objective here, and as we mentioned in the asset allocation thing, is that you have to plan. This is a longer term investment. You have to plan for 5 to 8 years to get an exit if you want to become an angel investor, right? You should always start with play money. What I mean by play money is that this is a zero sum game, right? The chances of going to zero are as much as the chances of the company being successful, right? So I think being a zero sum game, be ready to lose that money, right? So it doesn't mean that you're gambling it. It just means that you're okay to absorb the loss. So I think should not form part of your core saving. Maybe you can allocate around 5 to 10% of your total investment corpus to start investing, and over a period of time build out a decent portfolio, because diversification here again is what you would want to achieve, right? I think that's why you need to plan your portfolio, and I'll come to that later. But yeah, I think one of the things that you should remember in angel investing is that don't get in too late, right? So if you read about the startup in the papers, or if you read that all the market investors have gone in, and that's where the game is gone, right? You're no more angel investing, right? You have to come in at the right value at the right time to get that entire benefit of your risk return, right? And it's not about picking winners. That's what I would also extend the momentum play logic to. You're not picking the companies that are already successful. So you're not going to be an angel investor for unicorns or unicorns, right? You're going to be angel investor where you're betting on the founder and the execution that the founder will do, right? And obviously the idea plays an important role, but more so it is on the execution, and that's where this game of building and not picking winners, right? So I think as I was saying, yeah, what you need to build out your portfolio, you need an investment strategy, right? So I think somewhere we need to be very clear in what the investment thesis is going to be, right? In terms of are we looking at disruptive segments of the industry? Do we want to look at white spaces? Do we something new ideas? Do we want to look at things where non-linear changes are happening? So disruption can be your ed tech, non-linear changes can be SaaS companies. And do you want to create a diversified or a thesis-based portfolio, right? So when I say the investment thesis-based, you may say, India is changing, the consumption behavior is completely changing. I want to create something that is based on that. And we have seen that happen in the past on how behavior change has brought about success of, say, Uber, or you've seen WhatsApp, right? Everybody is using WhatsApp today when it was not there even 10 years back. So that is one way to pick out your investment thesis. Other can be future oriented in terms of, do I want to only look at SaaS businesses? Do I want to look at consumption driven businesses? So I think somewhere we need to put the thesis out. Otherwise, what will happen is you'll be all over the place when you have a large diversified portfolio, right? And somewhere a mix of this helps, right? I think having a diversified portfolio along with thesis based, a part of it being thesis based, is something that one should look at, because the thesis based portfolio is where your expertise lies, where your understanding lies, which is where you want to leverage your knowledge on. And diversification helps you to back a very good, high quality of founders. You can also, in this, when you're just starting out, it wouldn't be a bad idea to follow lead investors, right? So I think there are a lot of syndicates, there are angel platforms like LetsVenture, where you can follow certain investors who have been successfully doing it day in and day out, right? And ultimately, I think once you get into the ecosystem, you start understanding a lot of these things. You can start taking your own calls with, once you have the relationships built, once you have the better understanding in that space, right? This is something which exists, right? It's a very important thing which I think people just forget, right? And I think most of the angel investors I speak to, I think they've never thought about exiting, right? I think that the focus is, yes, it's a brilliant idea, it's a brilliant team, I want to invest. But somewhere you have to take money off the table. So I think that is something that you need to be clear about. And I think the way you can do it is it depends on what kind of industry you're looking at, and it depends on when you are entering, whether this company is building to sell, whether this company is a very scalable business where you may get exit around Series B, Series C when large funds would come in. So I think some of those things is something that we have to be pretty clear, and that I think will come out when you have a discussion with the founders on what they are trying to build, right? So I think that is exit expectations is a very important point. I will just want to quickly run through a couple of slides because of want of time is is on how to evaluate a deal, and this is one of the most important slide. I'm not going through the company stage and founding round size, but I think for me the team is very important because when I look at a startup to invest in, right, idea is of course important. Everybody gets an idea, but I think execution of that idea to make it a scalable business is what is very very important, right? So I think I would put a lot of weightage on the team because that's as I said, right. We need to see deep passion, purpose, right. They are creating something when they believe into it, right. I think in addition to of course to see that whether the team that is there is quite coherent, right. You don't want people with the same background with the same kind of skill sets starting out because you will need a product guy, you need a tech guy, you need a strategy guy, you need a sales guy, right? I think you need to have what I would say collective genius to come together, and that's what I think is one of the very important things that one should look out for when you are looking at investing in a startup, right? If the founding team, the three members are friends and they are copycats of each other, I don't think so. You're building out to success. I'm not saying it won't happen, but yes, you need complementary skills rather than a parallel skills, right? And of course, we have been through some of these. I think term sheet. I think this is a pretty long discussion. I think valuation is important when you enter into the angel round. Of course, you are entering at a very ideation stage, and you just have seen the POC. So of course, the valuation is important, and you should ensure that you get enough. Here, one of the very important things that I've seen is generally the biggest mistake that is made by investors, and that's what I would like to point out here is that investors go in and there have been investors who write a 1 crore check and say take 30-40% of the company, right? When you're living so little with the founders, right? When it's itself the first round, uh, there's no skin in the game at a later date, and then it doesn't become a VC fundable business. So I think be very careful as to what we are expecting as an investor, and managing that because ultimately your success as an investor lies in the success of the company, right? And of course, there are drag along, tag along. You should look at drag along, tag along. You should look at liquidation preference, preemptive rights, and of course, information rights is what you will get. Uh, Quickly, I think this is one other slide that I would like to just touch upon is that I think as an investor, right, when you're going as an investor, I think we are going as a financial investor, right? Of course, we have to give a helping hand. We have to open doors for them. We have to be mentors. But I think our objective is to be very clear that we should be aligned to the vision of the founders, right? I think ultimately that is the goal, right? Just because we are writing a check or just because we think we are mentors and determining the vision ourselves, that is what not the founder has thought of executing. I think that will cause a lot of friction and ultimately it will impact the success of the venture, right? So I think always important to get the right information, always important to connect, talk, share ideas. But I think, as I mentioned, right, don't prescribe the answers. I think that is a sure short way of killing the entity that you are creating, right? Don't want to get into this. I'll straight away get into some of the expectations. So when I mentioned earlier, you need to create a portfolio. This is a Kaufman study that was done, right? I think in a portfolio of 10 to 20 startups, right? Typically, let's just go with the number 10. You will have around three of them which will fail, and the ones that will fail, you will see them very early on, right? And there will be a middle layer which will give you very average returns, which is one x to 3x. But I think there'll be one or two companies in your portfolio that can give you around 20x, 20 to 30x, and that's what you would expect, So I think the division of the portfolio, you need to diversify the portfolio. You can bet on one or two bets and go all in. I think diversify, create a portfolio, and then of course the returns I think that you can expect can be much higher than what a normal your public market or any other investment would give you, right? And I think this is one of the biggest challenges that I would see. I think deal flow is the biggest challenge that an investor faces, and I think the way to address that is to join networks like LetsVenture, where we close around 15 deals a month. I think what we do. I think this is the kind of just a quick statistics. Today the number stands at around 350. And I think we're the largest network in the country today with more than 7,500 angel investors, and we are very marquee investors on our platform who lead transactions, so we can just follow them. I think that is the way I think I would recommend people to start. Right? So happy to take questions. I think I try to keep it short and quick because I'm sure everybody wants to run for dinner, but happy to take questions and would love to see if I can answer them. Yeah. Ashna? Yeah. So I think one of the questions that we have received is examples of term sheets. So I think term sheets, I think on the Let's Venture website, you will see term sheets. We have kept out all being very founder friendly. I think a lot of documents are available for free. So if you just go to the Let's Venture website, these are being attested by best of lawyers in the country as well. So you have your uh, templates of term sheets, SHA. In fact, we just also put out ESOP schemes. So I think whatever document you need, I think that will help you there. Yeah, I think that's about it. That's all we have here. Pro rata rights. Yeah, I just see one question that has come up. Pro rata. What's your take on pro rata rights? So I think pro rata rights is something which is pretty critical. I think in good startups, where you think there is growth, you should always double down, right? And that's what I personally have also been doing. If you find interesting startups, go for doubling down, and we always ensure that you have the pro rata rights that is present there, right? Should ESOP be after before angel investor? Okay, I'm just reading. According to you, are the returns from angel investing over 5 to 1 better than investing in the stock market? So this is a very tricky question. I think I think if you go by historical returns, public markets would average you around 20% mark. Right, depends on the portfolio. Even if you just look at the Nifty or some of the index, angel investing can give you more. But as I said, right, not to bet your entire money there. I think what you should allocate there is play money. I think I would not go beyond that. Should ESOP be allocated before entry of angels or after angel round? So I think this is something that you can create a trust. I think there's a lot of material available on our website. If you go on our website on My Startup Equity, you can read up there. In fact, we have a SaaS software which can help you in planning and working on those. So you can reach out to us from there. I also put up my contacts. If there is anything, you can let us know. Happy to do that. So I think there is one specific question on. Uh, uh, Okay, there is a question on, can you walk us through LV's journey, and at point in time LV saw an inflection point in the number of deals happening on your platform? So this is a very interesting question, right? So Let's just started 7 years back as a platform to demystify, democratize, and organize the private markets where the entire experience was pretty broken, right? Now, with that kind of environment in those days, I think it was pertinent to provide access, and that is what it has successfully done. And if I were to look at it today, I think we have become the largest platform, doing more than 100 transactions a year. Last year in 2020, in spite of being a pandemic year, we continue to do around 10 to 15 transactions every month. So I think it's the power of the network. It's the power of the marketplace. Being fair to investors, being fair to founders. I think that's what makes people come onto our platform, and I think that's what we are building out. Right. This- this- There's a question on how. What is your take on astrology space in marketplace product? Right. So I think it depends on what the ultimately. I think there are a lot of opportunities. There are a lot of things that are doable and that can be done. So if there is an idea where there is a market, you should go ahead and at least look at it. I can't comment just on a very generic statement here, but I think we need to go deeper into what we are trying to do. What about the angel investments in tier two and three cities? I think angel investment can be done from anywhere, right? With the technology platform that we have built, I think in fact we have investors from across the country, we have investors from outside the country. So as long as it's just you to download the app, go and register yourself and look at transactions, and you can do it, right? And I think if you are talking about investment into the Bharat companies, so there are enough companies out there which are doing a lot of work in tier two, tier three cities, focusing on the Bharat story of India. You see agri-tech, you see ed-tech. I think there are quite a few opportunities available out there. Yeah, one question is as an entry level investor, is there any cap in terms of percentage as angel investment? So as I think already mentioned, right, there is no cap as per regulation, I think, but as per your ability and your willingness and your understanding of risk appetite and capital, I think, as I said, I would recommend to use play money here over a period of time, build a portfolio with around 5 to 10% allocation in private markets across different stages and across investment portfolio. But yes, I think that's how I would. So I think I've covered all the questions. Yeah, I think I covered all the questions. Ashwin. So I think thank you so much for your time. Really appreciate it. And I think over to you, Ashna, if there is anything else that you would want me to take care.
Thanks, Nimesh. That was a brilliant session. And thank you, everybody, for connecting and joining in. We'll start again tomorrow, the day two at 11 a.m. And thank you again, Nimesh, for taking us through the journey of how to look at angel investments and through your experience, right? Thank you so much for the
Thank
opportunity.
you so much. My pleasure. Good night.
Thank you, everybody. Have a great night. Stay safe.